My name is Kate Rezabek, and I am so excited to be here with you this morning. As always, pop into the comments, pop into the chat, and tell us where you are tuning in from. We love seeing all of our KCM members come back week after week, starting your week off with the most important topic in the housing market. And of course, if you're new to KCM, thank you for being here today. Thank you for checking this out. We start every Monday off live like this. Really great way to stay connected on what's happening in the economy, the housing market, and everything that impacts our business, our buyers and sellers. Really fantastic way to start the day. So pop in the chat, tell us where you are tuning in from. We have a great topic on affordability today. So lots to talk about there, seeing some signs of improving affordability. So I'm really excited to chat with you about that. And we've got a pretty important announcement coming up too. If you've been following along with us and then watching the news about keeping current matters over the past week, I'm excited to share with you what's happening here. So always aiming to add more value to the KCM membership and to everyone who follows along with us. So as always, pop your questions in the chat as we go. We'll hopefully have some time at the end to be able to answer those. And of course, if you're a KCM member, all the slides that I'm sharing with you today, you will be able to download in the member area. And of course, if you're new to KCM, you can go to trykcm.com and we'll be able to get those slides for you, plus many more resources that we have with blogs, infographics, getting you on video, all the things. So there's a lot to explore here. So as we get started today, I said we're going to talk about affordability. We're seeing signs of improving affordability. But before we do, I want to share something really cool with you all. If you've been watching along and following along with us over the past week, we've had some big news at Keeping Current Matters. And here we go. Keeping Current Matters hires George Ratu as chief economist. We are so excited to share this news with you. George is someone that we have been following for a really long time. All of his fantastic work that he's done at realtor.com. He is an incredibly talented economist, and we are thrilled to share that he is now part of the KCM crew. And so, you likely know and love George as well. We quote him all the time with all of his insightful information and helping us really understand what's happening in the economy, how it's impacting the housing market. So George is now a part of the crew at KCM, and he's going to be adding incremental value to your KCM membership. He's going to up-level the KCM experience, being a part of our team, helping us drive insights, making sure that we are always bringing simple, effective, easy to understand, hyper-relevant housing market insights directly to you. So you're going to be seeing George pop into the deep dive in the coming weeks. You're going to be seeing him on our monthly market report. You're going to be seeing his thumbprint on a lot of our content. So it's really exciting to have George on our team. And what I'd like to do is pose a question for all of you. If there's a topic or something you'd like us to bring George into and to talk about and to see if we can get his economic insights on that topic, go ahead and pop that in the chat today too. We'll bring that information back. We'll continue to look at this, and as you keep your eyes and ears open for what's happening here at KCM, George will definitely be a big part of that. So we are thrilled and grateful and just so happy to have George here on our crew. So stay tuned for more. Now today, what we're going to be doing is we're going to be talking about affordability. I mentioned a moment ago that we're starting to see signs of improving affordability. So what I'm going to walk you through today is what's happening right now and visuals you can share with your clients to be able to explain what's happening in the housing market. Affordability has been a big challenge, especially over the past year or so. And here's where I'm going to start. I'm going to say we are not out of the woods yet. So as I walk you through this information today, keep in mind, affordability is still a challenge. But as we start to see signs of improvement, it is a great opportunity for us to be able to share that with our clients, bring them the visuals that help them understand exactly what's happening so they can make the most powerful and confident decisions. And they certainly need your expertise to help them get there. So we're going to talk about affordability today and the improvements that we're seeing right now. So I want to start with, affordability. Let's remember, is a combination of prices, wages, and mortgage rates. What have we seen recently? We've seen prices start to stabilize, moderate. We've seen mortgage rates a little bit lower. We've talked about this a lot over the past couple of weeks. If you haven't gone back to last week's deep dive or the one before, where David was really talking a lot about how mortgage rates are impacting the housing market and why we're seeing movement with mortgage rates, I encourage you to go back and take a look at that. But we've even seen over the past couple of weeks a little bit of easing in mortgage rates. We've seen what's happening with the Silicon Valley banks, all the different things that are going on. We're seeing mortgage rates coming down a little bit. Now, still very volatile. We know that the Fed has signaled that there is still more work to do to bring down inflation. So mortgage rates are going to continue to move, but we're seeing stabilizing prices, mortgage rates that have eased over the past couple of weeks. And we're also seeing, wages increasing. So all of those things impacting affordability. So let's start with mortgage rates. Let's talk a little bit about what we have been seeing recently. Now, this is a look at the 30-year fixed from Mortgage News Daily. It's their daily rate going all the way back to the beginning of this year. What we saw in that first month of January is mortgage rates were lower. That signaled increasing affordability. Now, what happened come February is that we heard that the Federal Reserve was like, you know what, we still have more work to do to fight inflation. So mortgage rates started to follow. They started to tick up a little bit. And then we saw more fear and uncertainty in the market later in March, as we saw mortgage rates start to come down, start to ease a little bit. So we're seeing a lot of volatility in mortgage rates, but as they come down, that's one of the levers of affordability that start to show that we have increasing affordability. So you can see, up around 7% in March, a lot of movement throughout the month. And at the end of the day on Friday, we saw 6.38%. So moving back into that range that we saw in early January. What happened then? We saw more buyers in the market. We saw mortgages become more affordable because it costs less to borrow. So we're going to continue to keep our eye on mortgage rates. But that's definitely one of the biggest factors that's impacting this improvement in affordability. Here's a quote from Nadia Evangelo at NAR, and she says, with rates below 6.5%, more Americans can purchase the median priced home. If mortgage rates continue to move down, the housing market may rebound faster than expected. So this was one of her instant reactions from last week, as we saw coming out of the Fed meeting. We're starting to see mortgage rates coming down. Certainly going to continue to follow this, going to continue to watch. It's a very volatile environment right now. We're still fighting inflation, but we're seeing improvements, and that's impacting affordability in a big way. So let's take a look at some of the data on where affordability is right now. And, this is homeownership affordability, and it's been declining year over year. This goes all the way back to January of 2021. So remember back then, before home prices had really accelerated, and when mortgage rates were historically low, homes were much more affordable than they are right now. That's the reality. That's the reality we need to really understand. And what you can see as, the past 2 years have evolved, affordability started to decline by really almost 30%. But what do I notice when I look at this graph? Over on the right, affordability is improving. So that drop down in those really dark red bars starting to get a little bit better as we move into this year. So that's a really important message to be able to communicate with our clients, because affordability is moving in the right direction. Remember, not out of the woods yet, not at all, but definitely moving in the right direction. And that is very encouraging, especially as we move into the spring housing market. Now, let's take a little bit of a longer term look at affordability. And if you follow along with us, you've definitely seen this before. And what it shows is that affordability is really at historic levels right now. So this is the Housing Affordability Index going all the way back to 1990. It's put out by NAR. And what it tells us is that the higher the bar, the more affordable homes are. So those orange bars, that was years when distressed properties dominated the market, short sales, foreclosures. And, we had a very different housing market then than we have right now. But homes became more affordable because prices crashed. Well, we're not sitting there. If you follow along with us, you know all the reasons why. However, what you can see over on the right is that affordability is definitely more of a challenge right now. Those bars are much lower today. You can see January of 2023 is that blue bar. It's better than 2022, so moving in the right direction, but definitely not as affordable as we've seen over the past few years, and not even as affordable as it was leading up to the housing crisis. So we're seeing affordability still be a big challenge, but we're moving in the right direction. And here's where I want to show you a little bit more of a breakdown. This is more of a month over month view of this same affordability index. So let me explain this for a moment. That dotted line across your screen, that's a value of 100 on the index. And what that means is at that threshold, a buyer who makes the median income can afford the median priced home. And so above the line, the higher the bar, again, more affordable. Below the line, not as affordable, a little bit more of a challenge. So what do we see over the past few months? We see affordability improving, moving in the right direction. Again, not as affordable as where we were. And you can see over in January of 2022, but as mortgage rates started to increase, you can see affordability started to go down, home prices were rising. We're starting to see home prices stabilize, moderate, and as mortgage rates ease, we see that affordability improve. So that's a really important message for our buyers who are thinking, I'm not sure I can afford a home right now. I've stepped out of the process. Showing them this improvement, really, really important. And before we go too much further and you say, hey, Kate, take a look at that. That blue bar is January data. Mortgage rates were 6 to 6.5% in that period of time. Absolutely, they certainly were. But what we just showed you a moment ago was that we're moving back into mortgage rates in that range. So that helps affordability. Of course, going to keep our eye on it, but definitely progress that we're starting to see. So let's take a look at what's happening with the median monthly mortgage payments as well. At the end of the day, if someone's going to buy a home, they need to be able to afford the median monthly mortgage payment. They need to be able to make their payment. Now, back in January of 21, you look at those green bars, it was much less expensive to borrow money for a home loan, so homes were more affordable. Prices were not as high as where they've increased to where they are right now. But again, as we start to look at monthly mortgage payments peaking around October when mortgage rates were higher and then coming back down, we're starting to see improvement. So a good $200 or so per month. You can see that improvement from October to January, and every dollar counts. Every quarter point in a mortgage rate counts. And how we certainly can't time the market, but we can help our clients understand what's happening right now and what this means for our buyers' opportunities. This is really, really game changing. Now, I want to talk a little bit about median household income and qualifying income as well. And this is where it starts to get very localized. So what this does is this breaks down by region the median household income. That's what you can see in those blue bars. And then green, orange, and red bars show qualifying income for the median priced home. Now, again, this is very localized. We know every market is very different. There's a different story happening in every housing market right now. And this starts to show that even when you break it down by region. So over on the left, United States average, the average home buyer making $90,000 a year, and the qualifying income for the median price home about 86. So a little bit more affordable on average. However, look at the West Coast. The median priced home, the qualifying income for that is lower than what it costs to purchase the median price home. So, really have to look at this region by region. You can see in the Midwest, much more affordable than the West, the South more affordable. We really have to look at this and say, clients, here's what's happening nationally, but I am your local expert here in this market. Let me show you what's happening right here in Richmond, Virginia, or Miami, or Chicago, or wherever it is that you are. You want to be able to break this down and be the local expert so we can see and explain this clearly and effectively to our clients. Now, one last slide I want to share with you before we wrap up today is mortgage payment to income ratio. Now, NAR recommends that the home buyer keep their principal and interest below 25% of their income. So when buying a home, that's kind of the threshold that we're looking for to make sure that, homes are affordable. Now, you can see above that line in October of 2022, it was 27% of someone's income to buy that median price home. So homes were less affordable then than they are today. We've broken below the threshold with price moderation, with mortgage rates easing a little bit. We're starting to see affordability improve. Everybody wants to compare it back to January of 21. You can see that 13% down much further below. We're not in that same market anymore. We're in a very different housing market. And as we start to come to terms with the more normalized mortgage rates, where they are today, where prices are today, the good news is that homes are more affordable than they were a few months ago. And that's the message we want to be able to communicate. If someone didn't qualify for a mortgage at 7% and they stepped out of the process and they said, I'm just going to wait, go back and have conversations with those people. There may be opportunities, partner with your trusted lender, being able to step in, be the expert, have confident and powerful conversations, share these visuals with your clients. Because at the end of the day, what we want to do is we want to make a difference. We want to help people. We want to help them understand what are the opportunities, what can we do to get this message out there and help our clients understand what's happening right now. And as we start to see these glimmers of hope, this improving affordability, really, really important to lead in this space and get that message out there. So again, not out of the woods by any stretch of the matter, but we are moving in the right direction. And again, every little bit helps. So as we wrap today, what I want to share with you is a great opportunity to download our spring listings pack. If you are looking to drive listings, to inspire confidence, to help your clients this spring, download our spring listing pack, trykcm.com/listings. You'll get our guide to selling your house. You'll get our professional equity assessment report to help clients understand how much equity they have in their homes. That could be the tipping point that helps them make a move, and a guide to selling your home. So many great resources. I encourage you to go and download these, check them out. And as you're having these conversations about where affordability is today, helping people step back into the process, these are going to be helpful resources as well. I'm going to pause right here and ask Jessica, did we have any questions that came up this morning?
Hi, Kate. I don't think I've seen any questions on affordability come through. Definitely some people excited that we brought George on, though.
Oh, I am so excited too. It's going to be fabulous. It is just the beginning of a lot to come. So thank you all for being here today. Thank you for coming to the deep dive. We will absolutely see you back again next week, and have a wonderful week.